If you make over $400,000 per year, the tax game has completely changed. With this brand new tax bill that just got passed in the last 30 days, you are now able to do what's called a reverse offset method. Essentially, there is so much net effective tax savings that comes along with buying a short-term rental that you're basically able to fund the total down payment and closing costs all into your deal. So I put together a quick breakdown walking through the exact process of how the tax stuff works, how you should be optimizing this for your real estate investing portfolio, and what it looks like if you do nothing versus if you do one of these this year. So let's run through it in about 10 minutes right now. If you make over $400,000 per year, this is pretty much everything you need to cover as far as the bonus depreciation. What are you trying to solve for? What happens if you do nothing? So let's dive in and start with the current situation. So if you're watching this video, this is probably you. You're somebody who's making a lot of money. You're getting taxed at an exceptionally high rate. So every year, you basically begin somewhere around this left-hand side of this column, and then you end somewhere closer to over here based on how much you're being taxed. And what we refer to this as is the wealthy hamster wheel. You're just consistently doing this process over and over and over again. So to kind of extrapolate what's going to happen if you don't do anything, well, you're kind of starting to feel it right now. So we'll go into these quick assumptions. First, let's state you're making roughly $400K per year. Net effective federal tax rate plus some state tax plus some payroll tax. That kind of gets you somewhere around here, right? So net effective tax is basically a pretty significant chunk of whatever you're making. And if you extrapolate out over to a 10-year period, it gets pretty insane. And it's kind of hard to recognize and feel this in the moment when you're so used to having your employer or the federal government withhold specific amounts of your tax bill. And when you kind of just look at the graphs and see what's actually happening over time, specifically this one, when you look at a 10-year, 20-year, 40-year period, if you have 10 to 20 years left in your working life cycle, you're probably losing a pretty egregious amount of tax. So the name of the game is obviously getting clear on just what does the game look like, how bad is it? And I think the main thing is that I see most of the people who are thinking about getting into their short-term rental journey, they're already doing this, right? You're working with your IRA, your Roth, you're maxing out your contributions, you're doing things like dollar cost averaging into maybe some ETFs, maybe the S&P 500. And I really love this quote from Jim Rohn. He's the guy who basically coached and gave all the inspiration to Tony Robbins. It's majoring in the minors. You can't see me circling that there because it's black, but it's basically what most people are doing when there's a much more powerful, higher leverage thing to do, which will actually get you off the hamster wheel. So if you're, just wondering who is this guy, take it from the big dogs, take it from Ed Slott. This is one of my biggest inspirations. And then also this CPA for Rich Dad, Poor Dad, Robert Kiyosaki, if you've ever heard of them. The number one thing that's just going to keep you stuck is a massive tax bill. Because again, to get final alignment here, you can't really get ahead if you're just losing 22 to 38% of everything you're making. And obviously this Roth stuff, S&P, dollar cost averaging, is just majoring in the minors, according to Jim Rohn. So the current situation definitely sucks. We can't get ahead if we're just losing this amount every single year. So the cost of inaction is pretty significant. And again, just look at that 10-year timeline. If you want to fast forward the timeline to actually retiring, if you want to have a more luxurious lifestyle, less stress, being less overworked, having more time for the spouse and for the kids and family, this is the alternative approach. It's literally this opportunity, which is right in front of you. And it's to do something that we call a reverse offset method. This is specifically buying real estate for the purpose of maximum purchase price that you can afford, lowest down payment into the deal so that you get the maximum amount of bonus depreciation for the lowest total entry into the deal. And the most ideal scenario is where you get a reverse offset. So basically meaning if I put $130,000 all into my deal, I want a net effective tax savings that is close to $300,000, $400,000, which shaves my net effective tax bill rather. It shaves it down by $130,000, $140,000 in net effective tax savings. So we're playing this like golden ratio, 1-to-1 rule game when we're buying real estate. So we'll talk about that in other videos. Now, this is what you're really trying to optimize for, a scenario where you're constantly making money, buying real estate, keeping the majority of that money, and then also in that period, you're doing things like getting cash flow, paying down the equity on the home. So every mortgage payment that you make, there's a principal payment baked in there as well. So you're obviously paying down the equity and bolstering your retirement portfolio. Plus, if you're doing this the right way, there's also positive cash flow. So the goal, instead of being like this scenario where you're typically stuck just making a lot of money and ending the year losing a lot, an ideal scenario is where you're actually investing and not majoring in the minors, doing something that is so high leverage where you effectively get to keep the majority, if not all, of your total taxable income and have it go up in value over time baked into a real estate asset. So what you're really trying to optimize for here is transitioning from this current scenario where a lot of people are stuck in right now. You're just making a lot of money, you're super high income, but you're losing the majority of it to tax. So this is an annual rate. This would be a monthly loss. This would be a weekly loss. And this would be the equivalent of a daily loss. And I think this is super mission critical to understand because being the American that I am, sometimes I think in football fields and washing machines and iPads and these units of measurement, which are really kind of eye-opening when you actually think about what does a $184,000 per year tax bill actually look like. Well, that's a lot of $450 iPad minis. That's almost an $850 MacBook Air per day. And when you really put it in context and think about it this way, it becomes very obvious. You can't get ahead. You can't dollar cost average in and solve for this. You can't max out your Roth IRA and solve for this. You've got to stop throwing iPads away or hundreds of thousands of dollars per year away. So this is a scenario that you want to get to with maybe one property purchase. If you wanted to do two properties that were, in this case, probably closer to around $1 million in purchase price a piece, this is what you try to be optimizing for. And the most ideal way to do this is, again, buy cash flowing tax saving Airbnb, get it live as a short-term rental this year, knock out your material participation. I and most of my clients end up front loading it. So I'm a real estate professional of 2,000 hours per year. Almost every single one of my clients is not a real estate professional. So they will front load their participation and still participate more than anybody else, even if they use a co-host, because they're probably going to spend more time than any one individual person in that whole entity. And then you want to max out your tax incentives and the tax strategy with a CPA who specializes this. And you're just going to wash, rinse, and repeat every single year for maybe the next 5, 10, 15 years until you decide that you can basically retire off of the cash flow and the equity that you've built up in your real estate portfolio. So you either sell homes as you get older, you either take loans against them, do cash out refis. There are so many different options. So the very simple mechanics involved with all of this. Bonus depreciation is that thing that you get when you buy an asset. It is the total dollar amount that you basically get to offset against your total taxable income. And in order for you to qualify for this, you basically need to meet some sort of real estate professional status. So there's different criteria. For example, I am somebody who's a full-time real estate professional. I do 2,000 hours per year. There's another scenario, which is typically used by many spouses who don't work full-time. They do the 750 hour per year rule, which is around 15 hours per week. Now, the likelihood of you qualifying for either of those is probably almost zero, especially if you both work full-time. So in comes the STR loophole, which is basically this. It's stating you're basically needing to spend minimum 100 hours, get the property live this year, and also make sure it's actually ran as a short-term rental so that you can qualify for this bonus depreciation. And that bonus depreciation amount is determined by a cost segregation study. A cost segregation study company is somebody who literally visits the property, sends an engineer, structural engineer, somebody else to literally assess and take photos of everything in the home, everything that basically is not the furniture. They're looking at the walls, the ceilings, the roof, the appliances, everything in there, and they're coming up with this estimated lifespan of everything that is baked into the value of the home that isn't the land. And then they're spitting out a final value. So what's really cool about this is, as of this recording literally today, we are finally getting the official thumbs up on including all the provisions to get 100% bonus depreciation coming back for all of this year, the next 5 years. It might even be the next 8 years. There's one version of this that I saw that looks like they're deliberating on whether it's going to be up until 2033. So all really, really good news. So let's quickly workshop an example. Here's a home that a client bought last year, $949,000 purchase price. The bonus depreciation amount ended up being $313,000. So if you're at an average net effective tax rate of, let's say, 33%, that gave you a net effective tax savings of just over $110,000, maybe $101,000, $103,000 net effective tax savings. And the way to qualify for this was Peter and his spouse front-loaded their 100-plus hours. They spent significantly more than 100 hours managing that property that year. They got it live, and then they ordered that cost segregation study, and that was the dollar amount that came back. And this client ended up doing multiple deals last year to max out the total net effective tax savings. They actually ended up buying more than enough to basically get this to zero. So to quickly recap this, final thoughts and next steps, your whole goal is just figuring out what is the total taxable income, what does the tax bill look like, and then how much real estate are you going to actually need to basically get as close to maxing out your bonus depreciation and the net effective tax savings as a result. So that is the rub in under 10 minutes. Looking at the clock, we nailed it. So if you're interested in working directly with the team, click the link somewhere on this video. There is an opportunity to actually have us do all the finding, negotiating, and all the guesswork and the legwork of the right markets, the right deal within that market, getting the best price and terms, and then also closing on it 95% done for you with no more than 30 to 60 minutes of involvement from your end every single week. Same thing with maxing out the cash flow, having a co-host or a property manager actually do the management for you, somebody who's a proven veteran in that area, and then also the tax benefits with an intro to a CPA who actually specializes in all this. So if you're interested in working with us, click the link somewhere around this video.